Hi, everyone, and welcome to a new episode of Adapt and Thrive. I'm excited to have Alfonso Quadra with us today. Alfonso, welcome.
Hello, Dalia. We're going to thrive today. Not only are we going to thrive, we're going to help people thrive. I think out of all your
Absolutely.
episodes, I think this is the $1,000,000 episode right here.
I am excited to talk to you, especially it's fresh out of the oven, 10 a.m. this morning. Bank of Canada raised their interest rates again. So we're going to talk
Woo!
about that. But first, I'd
Woo!
like to share a little bit about you with your audience. For those who don't know, Alfonso is the founder of Wealth Genius, a real estate investment community. He's a veteran investor himself who invests in multifamily assets and developments. And he's a serial entrepreneur. He's a speaker. He's an author of a book called From the Ground Up, a success coach, philanthropist who has been seen on Reader's Digest, Rogers TV, the New York Times, to mention a few, and many, many more. Excited to have you with here today, Alfonso, to share your thoughts on the shifting real estate environment and to share some strategies and tips that you're personally using and you're helping your students with as well. So welcome.
Yes. You know what? It's my pleasure. My pleasure. I knew from the very moment we met a while back, that's my friend. I knew it. That's my friend. And when I was looking at your show, I was like, how come I'm not on your show yet? Like, what's going on?
We wanted to give you the tough questions. We wanted to ask you the tough questions. That's why.
For now, for that now, this show has to be. We're gonna hit a home run here. This show is gonna be out of this world. So if you're watching this right now, you better stick around all the way to the end because I'm not gonna be dropping nuggets here. I'm gonna be dropping bombs. You know, and because we want to make sure we want to inspire people to take action because Dalia, as you know, we're living through very interesting times, and the next 10 to 12 months are going to be extremely important for all investors across North America, the Western world, or even the world. Because when we look back in history at this time, the next 10 months are going to be seen as the months where we saw the biggest wealth transfer in history. So I'm excited. I don't know about you, but a lot of opportunity out there.
So actually, you kind of started answering my first question here, which is how do you characterize the market ahead in terms of opportunities and or risks for real estate investors?
I would say it's all opportunity moving forward. And as the time, because people will go out and they're like, it's scary.
Yeah.
It's uncertain. Very similar to April of 2020. It was scary, uncertain. Everyone's like, well, you got to hunker down, watch Netflix, put on your jogging pants. And
eat dark chocolate too. And
for
drink
me,
red wine.
I have an addiction. I need to buy real estate, and we took massive action, and and this is time stamped, on my YouTube channel. If you go back to April of 2020, I have multiple videos where, Dalia, I'm begging people to buy real estate. I'm telling them they will never see such scarcity in a short amount of time where people have adjusted their prices. And we went and we took massive action. We bought millions of dollars worth of real estate between April of 2020 to August of 2020. As you know, it all doubled in price. It all doubled in price. And so we are in very similar times, uncertain. People are scared. And this is the time to take action, right? Of course, you want to be smart about the actions that you're taking. You want to be conservative with the underwriting that you're doing, but take action, because when the other asset classes start smacking people in the face, everyone's going to come back to real estate. It doesn't, regardless of what the interest rates are, people are just going to want to hold their wealth. Right now, people are thinking about capital preservation. And there's only one asset class that can give you that capital preservation. That is real estate.
Absolutely. Can't agree more with you. So you see this as an opportunity, but you also talked about better underwriting. What are some of the
Yes.
things you are doing to better underwrite or due diligence on deals in this market?
Well, not even this market. Let's go back a year ago. So 2020, I went on a shopping spree. Then 2021, I looked at my portfolio, close to $200 million. And I looked at the bottom 20%, and I created a liquidity event in our company. We offloaded all the underperformers, the ugly babies, the troubled tenants, all the stuff, okay, all the problems, all of it. We created a liquidity event, and then we took that capital and we leveled up to really lean and clean type properties, brand new builds, 60 units and above. Now the question is, I've bought we had bought properties, and they weren't working at the numbers that we had them at, and we sold them almost twice what we paid for them. And so who bought those properties? Right? What kind of underwriting were they doing? Right? And so what happens is people get too excited sometimes. They watch a YouTube video and they try to force the situation, right? Sometimes the best deal that you could ever do is the one you never did, the one that could potentially hurt you. And so when I talk about being conservative with your underwriting, you have to stress test your own deal. There is uncertainty. And what I tell my students all the time, I ask a very simple question. What is the worst case scenario? And if you cannot deal with the worst case scenario, that's probably a deal you shouldn't be doing. And so what I do is I look at the worst case scenario, and then I say, okay, can I deal with that? Yes, I can. I move forward, right? And that way you're going to stay out of trouble. If you have proper reserves, proper underwriting, proper vacancy rates, if you're not hoping to make money, but knowing that you're going to make money, sometimes people smoke the hopium, right? They hope too much. They hope this happens. They hope they get their tenants out. They hope this, they hope that, but all of it are not sound investing fundamentals, right? And so those reserves are going to help you weather any potential storm that may be coming our way.
I love it. So stay away from the hopium, folks. Stay away from
Don't smoke the hopium. Say no to hopium.
That's awesome.
Yeah.
Okay. Are there any investment strategies that investors should stay away from in the next 12 to 18 months? And the other side of the coin is, are there strategies they should stick with?
Yes. And this is my opinion. I don't have a crystal ball. And a lot of people are going to watch this and probably they're going to watch it next year or something at a point where, everything has already unwrapped. I think we're headed for a really deep recession. And so the key is going back to those fundamentals, the numbers, all the extra shiny stuff. You are going to be in a situation where you have exposure. The Airbnbs, the storage units, the commercial spaces, office spaces, all of those areas are gonna get hit during a recession, right? So for example, right now we're going through this transition where people are working more from home. If you are going to get into the office space, I may think about it twice. During recessions, people tend to hold on to what they have, what they can control, and they cut the extras, the vacations, the going out. They cut maybe they won't, they're not gonna pay for $300 a month to store junk. Maybe they'll take that home. And so when people need to cut, those are the first things that get cut: the vacations, the extras, the RVs, the cottages, all the fun stuff, all the shiny stuff. What they do need to do is they need to live somewhere. And that's where I would steer the majority of the investors right now. Right now, you have an opportunity where people have, for the past 2 years, locked in really good mortgages at really good rates. I would be looking to assume some of those mortgages. I'll give you an example. We're working on a deal right now, 11 million with a 7.1 million dollar assumable mortgage at 1.74% for the next 7 years, right?
Wow.
So, right now there's a lot of great opportunities where people need to unload. For the very first time, you're going to see a lot of REITs unloading a lot of these properties because they need to, make sure that they make profit, right? And so their balance sheet has to say profit for their investors. They need to be able to continue to pay, and maybe they're not going to be in the acquisition. Maybe they're going to slow down on acquisitions, and so maybe they're going to be in the disposition business. And so there's so much opportunity, and maybe some people are going to disagree. That's fine. We can all agree to disagree. That's fine. But I think the specialty type real estate is going to get hit first.
Interesting. Okay. Well, today on the rates note, the R word is what I call it. Bank increased the rate by 50 points, which was expected. Just observing what's happening. Obviously, there are some investors that are experiencing cash flow pressures if they're in an adjustable rate or a variable rate, or if they're coming out of an existing term into this higher rate environment. There is an impact to their portfolio cash flow.
Yes.
So what are some of the income or debt restructuring strategies that you or your students are currently deploying to manage that pressure, if any?
Sometimes people tend to want to move forward without actually analyzing what your portfolio is doing. Can you optimize and maximize what you already have? For example, is there area where we just talked about these storage units, storage lockers, people, potentially not paying $300 a month for storage, for a storage facility to store their junk, but maybe would they pay $75 a month, where you can have a smaller locker on your property and help people with storage and get an extra $75. Extra $75, that's huge to your net operating income on a multifamily. Can you add a vending machine in your laundry room? Can you optimize by turning over some units, repositioning that property? Sometimes people are too quick and too excited. I know, because I'm one of those people that just get excited and want to go after the next thing. And I say this to a lot of my students: why don't you look at what you already have and stabilize, optimize, and maximize?
Oh, I love that. Stabilize,
optimize, stabilize, optimize, maximize.
Stabilize, optimize, maximize. I'm gonna write that one down.
Yeah. So if you put if you invest in a efficiency toilets, for example, in a 24-unit apartment building, that's definitely going to help your cash flow, right? If you put in sensor lights, if you put in energy efficient boiler system, new appliances. I mean, all of these investments are going to help you with cash flow, and especially if you have multiple units. If you can just move the needle a little bit on 24 units or on 20 units or on 15 units or on 10 units, that's significant savings. Will ultimately end up back in your pocket, and you'll find that it'll be the same, right? Like, you lost some cash flow over here on the interest rates, but you recoup it by optimizing your property. So that's what I would do. The second thing is, if you are buying real estate, I just talked about the idea of assuming mortgages. I think people have really great mortgages, and for commercial mortgages especially, you're going to pay high penalties to break those mortgages. Well, you can be in a position to assume that mortgage, save the seller the penalties, and you get a really good rate. Now, here's the problem: where the mortgage is and the value of the property, you may have a big gap.
Yeah.
If the seller's truly motivated, that seller is going to help you with that gap, right? So he's going to have to lend you maybe a little bit of seller financing to help you, with that loan to value.
Yes.
And he's gonna have to lend it to you at a lower interest rate, because to get approved for the first that you're assuming, you
Yes.
have to meet the DCR.
Yes.
And so you can't have this crazy payment as a second mortgage.
Yeah.
And so I think the industry is kind of set up for us to buy, right? And buy good, because people have they've gotten these really amazing mortgages.
Yes, I am in the midst right now of working on a deal that matches exactly what you've described.
Yes.
Low rate, CMHC, assumable, commercial, and there is an opportunity to add that vendor take back at lower payments to make the overall debt coverage work. So absolutely the opportunities are there. And what I'm finding too is people are more open to negotiating things now compared to 6 months ago or a year ago, where I was seeing multifamily deals being purchased firm.
Yeah,
So,
it was insane.
yeah. So
I was
now
selling.
I know. So it is a much better environment for investors, to your point, despite the fact that the rates are higher, there are opportunities to tap into. So
And there's still a bit of adjustment, right? Because people, and I talk to people all the time, they're like, sellers are still back in March of this year. And that's true for the most part. A lot of sellers still haven't adjusted to the reality, but it's only a matter of time.
yeah.
I mean, today the interest rates going up, that's just another reminder that your property is not worth what you think it was worth. And sometimes people become anchored to these numbers, and only time can help them adjust and come back to reality.
100%.
As of July 13th, I was officially out of the selling business.
Mm.
And so if if you're an investor like me, if you're trying to sell a property because you wanted to cash in on this crazy market that we were experiencing, after July 13th, you're pulling your property off of the market. And so what you're going to find now are people that truly want to sell, not people like me that wanted to cash in on these crazy, not ridiculous, redonkulous prices. You know what I mean? And so, that's what you're going to find now. It's like a lot of the true sellers are out there, and those are the ones that have their properties still on the market. And now you can see what the motivation, do proper discoveries. For you to sell a property in 3 months, 2 months, have multiple offers on multifamilies, that wasn't normal back in 2019. You didn't hold offers on a multifamily apartment building. And so where we're headed is a little bit back to where we were in 2019. And the only difference is that because we were in this selling mode, in this seller's market for a little bit of for a while, July 13th was the official end of my selling career, and it was the official beginning of hunting season. And that's what we've claimed it as of July 13th.
Great insights. Thank you. My last question is, what are the top 3 things investors should be doing more of or differently right now?
Number 1, building relationships. I see a lot of people, they want to skip that part. They they're more transactional. They'll call the realtor and they talk about the real estate, or that real estate, the numbers don't make sense, and they're like, okay, next. This is the time where you build relationships. In fact, you want to build relationships at all times. And the gap between where you are and where you want to go in life, okay, whatever your goals are, the gap is always people. Good relationships, solid people, development of people, development of leaders, surrounding yourself around the right people. That is what we were missing in the past 2 years, because it was going so fast. We're doing deals, go to the next one, go to the next one, go to the next one. So the number one thing I think people should be thinking about is the development of people, relationships. That is number one. Number two, you know what? If you didn't have time before, you need to invest into yourself. People are always asking me, what is the place? What's the neighborhood? What should I be investing on? The first place you should be investing is on yourself, right? You should be investing in yourself, getting educated, connecting to communities, getting around more like-minded people, building those relationships. And when people ask me what are the top real estate books that I should be reading, I'd say, well, you're not going to like my answer. Leadership and sales. Those are the two types of books that if you want to become a master in real estate, you should be reading about leadership and you should be reading about sales. And I know it's not exciting, because when you go to chapters, the dusty shelf at the bottom is all leadership. People tend to overlook leadership and the development of people, but that's exactly what you need. So number one, people, relationships. Number two is investing in pouring into yourself, right? And number three, being determined, having clear goals and not taking no for an answer, not giving up, and moving forward no matter what. Because if someone is truly determined and they have a purpose, they will do what they have to do when they have to do it, no questions asked. And I see it too many times. Someone says, well, you know what, we're not going to take your offer. And that's it. People give up, right? That's not the way we used to do real estate back in the day. We used to build relationships. I'd come back with a different offer. If someone says no, it doesn't mean it's no forever. It's just no for right now. But in a month from now, you can come back to that negotiating table and maybe they will take your offer after you have knocked on that door several times. And so have that type of attitude. That's what you got to develop in these next 10 months.
All of these things you shared are gold. I'm just going to take them and put them in a box, and I'm just going to put it here, right here. It is, I love everything you said. People, it's who, not what. Investing in yourself. I love what you captured on leadership and sales, because I read a quote that says, you will grow in life as far as you grow personally.
Yes.
Then the third one, which was the clarity. I also read a quote that says clarity breeds mastery, and then the action, but not just doing it. It's doing it within that clear framework, to your point, and not taking no for an answer. Because I've seen it. I've seen investors, say, but the lender said no. This is just one no. What can we do to turn it to a yes? Or who else can we talk to make it happen? It's just one no, but people take that small no and make it the entire screen.
Exactly.
So love all of these points that you shared with us today. Thank you so much for the insights, for the golden nuggets you shared. And if our audience if our audience wants to connect with you, where can they find you?
They can find me on all platforms. And if I'm not on their platform, shame on me. But what I will share with people is my YouTube channel, Alfonso Cuadra. Go find me on YouTube. I have over 1,000 videos. And if I say anything there that resonates with you, reach out.
Fantastic. Thanks again, Alfonso. Have a great
Thank
day.
you. Bye.
Bye.
Thank you for watching. Don't forget to comment down below, subscribe, hit the bell to be notified the next time we're doing a video. And guess what? Like, share, dislike, I don't care! Let me see how that looks.